Ethereum against US dollar has behaved as explained in the previous week analysis, and that is the price will reach around 2,400, and we can see the price almost reached this price level this week, but we have 2 more days until this happens. And what we can see after the price has made a breakout to the upside, we can see that the price returned slightly back down and then continued to rise in value. So this week the price has made a bullish breakout on the daily time frame, and it has reached a very important level, and this is the supply zone around 2,400. On the weekly time frame we can see this is still bullish, and what we can see is still moving to the upside, and it is very close to this price level, which is a very important level for the price. And if we go to the monthly, we can see this is still bullish, and after the price has made a breakout to the upside on the weekly time frame, the price did not return back down, reaching around 1956, just to confirm this bullish breakout as a valid one. But the price continued, which is suggesting a very strong bullish momentum on the market that will not stop very soon. So if we see it here on the monthly time frame, which are very important levels, so there is a possibility for the price to rise in value up to 2,590. We can see it here. But on the monthly time frame, can anything happen? Also, there is a possibility that the price makes bounce back down, because we have 3 more weeks until this month ends. So this means in these 3 weeks until this month ends, there is a possibility that the price returns back down up to 1960, around this one here, 1950, just to confirm this monthly bullish breakout. For that, we need to go to the weekly time frame and see how this looks. So when the price reaches this, and we can see it here, it will be a confluence of resistance. The price could drop down in value around 2,300, and then also possibly reaching around 2,184, which is at the start of this demand zone. So for the price to move down around 1950, it is less likely on the weekly time frame, because this would mean a very strong sell-off in the market from this area here. For that, we need to wait until the daily time frame shows us that sell-off. So if the price reaches this area around 2,400 and also possibly around 2,450, this is a confluence of resistance. We can see it here. The price could sell off here from here and stopped here around 2,300, which is a small confluence of support and resistance. If the price breaks below this one, which is 2,233.13, the next stop where the price could stop is this demand zone around 2127 price level. And also we can see here the price has had problems in the past, making a breakout to the upside. So it's very important level for the price, and if it holds, this will mean the bulls are have enough strength to push the price even higher. But if this support doesn't hold, the next one where the price could stop is around 1950, which is visible on the monthly time frame and also on the weekly. But very important level for the daily and also the weekly is this one here to hold. Until that happens, until the price comes here, I'm still bullish, and I'm expecting that the price will reach around this 2,400, and then from there making some kind of retrace or bullish breakout to the upside. Everything can happen, but for now this is the idea, for now to reach this area here and then making a retrace back down. So if you would like to see also what would be my entry ideas with a stop loss, where to exit from the trade, and also what is the take profit, where to exit with a profit in that trade, you can also check my trading community, where I share each week 8 analysis with 8 potential setups with the entry, stop loss and the take profit. Check my trading community below in the description, and if you would like to join, feel free to join. That is all from today's analysis. I hope you enjoyed. If you have any question, feel free to leave a comment. If you like the analysis, click the like button and subscribe. See you next time, and a happy trading!